it would be if you compare Poland, or the region for that sake, with the other parts of the emerging space, so with Asia or Latin America or other parts of EMEA. I think that might also be interesting. And I might also try to offer you a couple of explanations for my key findings, which would be, first of all, that the region is very competitive, I think. Secondly, though, however, when you look on the capital market developments, it seems that in the region it has played less of a role compared to other emerging market regions in terms of generating competitiveness. And the third point is Poland is a clear front runner in the region in terms of capital market developments. And this is, I think, also very important to highlight. So what I have done, something very easy. There are a couple of very good international surveys telling you how good a country in terms of macroeconomics is. One is, let's say, the World Bank's Ease of Doing Business report. The other is, if you take the World Economic Forum Global Competitiveness Index. So if you look how CE scores, so Central Eastern Europe, let's say in terms of the the Ease of Doing Business survey, the CE scores 58th place. That's out of let's say a sample of 190 countries. So it's definitely in the top 1/3. Poland is eventually 47, so it's definitely even better position there. And if you look at versus, let's say, Latin America, we score at the same level. But the region definitely scores better than Asia, or let's say, for example, other parts of EMEA, which in my mind would include countries like Turkey, Russia, South Africa, Greece, a couple of Middle Eastern countries. So it's fine. But if you look on, for example, certain indicators like getting credit, then the region and Poland itself is a leader. So it seems that when we're talking about banks, the region is well ahead of anyone else. You know, it's very interesting in terms of the ease of getting credit. Poland ranks 3rd globally. So it's, I think, an outstanding achievement here. But let's take a look on investor protection, which has a different category there. And you know, that comprises things like disclosure, director's liability, and so forth. And then the region moves from, once again, 58th on average to 93rd place. So it looks very bad eventually when you compare it, let's say, even to, let's say, Asia or Latin America. Poland ranks 57, so it kind of feels a bit better here. But it's still, there is a big disconnect between the average competitiveness and, let's say, one category that might be a bit more relevant for the financial market developments. If you do the same math for the World Economic Forum Index, it's once again, if you take the average position for C in terms of ranks, then it's something very simple. The region ranks in 47th place out of 150, 1/3. Good position. Poland is 43rd, fairly close to the average. And the region is, however, lagging behind Asia, well ahead of Latin America or other kind of EMEA countries. But once again, let's take a look on one specific thing, for example, which is the ease of listing the ease of getting finance from a local equity market. There is a sub-index for that. And the CE, once again, kind of moves back to the 80-something place, which is way beyond what you see in Asia or in Latin America. Poland is better positioned, it's 57th, but it still kind of feels that in terms of, for example, access to the local equity market, feels a bit harder here than, let's say, other parts of emerging market space. If you look on the whole financial sector development, including banks, venture capital, then Poland, for example, scores better than any other regional average. So Poland scores better than the average of Asian countries, the average of Latin American countries, or the average of other EMEA countries. So it kind of, there seems to be a touch disconnect here. And maybe let me try to give you a couple of more interesting things why I think this might be the case. The first one is the role of foreign direct investment in the transition countries. You know that in the region, basically, after the collapse of communism, capital was obsolete. We have spoken about it, I think, previously. And it's also very important that you didn't have a big enough local savings base, what you had in Asia. And hence, what was key in terms of the development of these countries is to get a lot of FDI in, so foreign capital. And if you look, FDI as a percentage of GDP in the region on average is 70%. In Poland, it's 50%. But that ratio is 6 times more than what you see in Asia and twice as high as what you see in Latin America. Let's flip it around. Let's take a look at market capitalization versus GDP. Then the regional average is just 1/8 of what you see in Asia and 1/3 of what you see, let's say, in Latin America. Once again, Poland is 3 times as high as the regional average. So Poland is around, as we heard already today, 40% of GDP. It positioned better, but it still kind of lags behind a bit. So maybe one reason, which is not, I think, quite clearly exploited, is that some of these capital market developments here have been existing at the same time when foreign direct investment has a much higher presence than what you see in many other parts of the emerging space. And then, sorry, just to lastly conclude, also the role of banks is interesting, because if you look on the literature, the role of banks in helping the capital markets, in the initial phase of the development, they do. But at some point, these become substitutors, i.e. companies can raise funding from equity markets, but they can raise funding from the banks as well through the debt market. And hence, it's not always kind of, the relationship is not always one way and positive. And maybe the last point on my introduction, I'm sorry if I've taken a bit more time, is what I would call that size matters definitely in terms of market capitalization. I'm sure most of you know that Poland's weight in the global MSCI emerging market index is 1.7%, and it's in the 13th place in terms of the country ranks there. But Poland's capitalization is twice as much as all the other Central Eastern European countries combined. So if you think of it, would there be a possibility for any other regional center? Once again, just being a simple macroeconomist, it feels to me the answer is clearly no. Thank you.
Thank you very much. Some fantastic and really quite insightful statistics there. You should expect to see them in a Financial Times article quite soon. Filip, we've seen some big reforms to the capital markets here in Poland recently. How do you think that they might affect what we've just heard there from Gyorgy and the role that they play here?
Yeah, thank you, Henry. As you said, Gyorgy, Poland is by far the largest player in the region in terms of market cap, and this didn't come without a cause. I think the success of the Polish capital market has been built on the 2 strong legs. One is the flow of privatization and consistent government policy towards privatization, and the other one is, of course, the creation of the pension funds, which created enough liquidity to absorb the flow of transactions. And then with the market gaining the critical mass, also the private companies, they have noticed that capital market is a viable alternative to raise financing. But here we are, as you all know, the government decided to introduce some significant reforms to the pension system, and we think they will have a significant impact going forward. Just to quickly recap what happened for some of you who didn't follow. Following the reform, the system, from now on, pension funds will face significantly reduced inflows, while in the same time they will start to transfer a big part of their assets back to the social security system. And as a result, the system will become negative in terms of flows with the social security, and only on aggregate they will remain positive thanks to the dividend flow from their portfolio. So this will result in I would say, massive change in the investment policy of Polish pension funds. And a couple of themes here. In the new environment, pension funds will have a strong preference for liquidity. That means that they're faced with the steady outflows, that they will rebalance their portfolios toward more liquid assets, which can be monetized in a relatively short period of time. Which means that liquidity might be skewed toward large caps at the expense of small and mid-cap stocks. Now, the preference for liquidity is also interconnected with the second theme, which is international diversification. Given that foreign limits of pension fund investments will be gradually lifted, and in the same time developed markets offer superior liquidity than Warsaw, then liquid foreign assets may solve both problems, which is liquidity and diversification of assets. Another theme which we've seen and also heard from the fund managers that we talked to is the preference toward dividends. So dividends are becoming and will still be a very important part of the equity story. especially in the situation where the system, as I said earlier, is negative in terms of flows with the Social Security. The dividend stream is crucial factor preventing erosion of pension fund assets. And now the good news, of course, is that the system as a whole will become positive in terms of inflows. And we heard from the fund managers that they are back in the IPO game, which means that they will still be looking at potential IPO candidates, but at a slightly different way. Especially in the mid and small cap segment. So we think the cost of capital raised for smaller and mid-sized companies will raise, because they will have to either offer a superior equity story, superior growth prospects, or a much lower valuation versus assets currently held by the pension funds in their portfolio. And last but not least, a topic that has been already discussed on the previous panel, but also one could expect a sort of a reduced attractiveness of listings by foreign issuers on the Polish market. Now, one of the key driving forces which attracted foreign issuers in Poland was the fact that there was a relatively low foreign investment limit for pension funds, but these equities which were listed in Warsaw, regardless of the country of origin, were considered as local equities. So that was the only efficient way for a pension fund manager to diversify into non-Polish assets was to buy foreign stock listed in Warsaw. On the other hand, for the international issuers, so you wanted to jump in? Okay. On the other hand, for a foreign issuer, a listing in Warsaw enabled them to capture sort of a unique pocket of demand which they could not find elsewhere. Now with the new regulatory environment, foreign stocks listed in Warsaw are no longer considered as local stocks. They fall within the international investments limit, which means that they will be evaluated on the same basis as any other transactions from Europe or other OECD country. So just to very briefly sum up the effect on pension fund reform on the competitiveness of companies in the region. We think that on the large cap and on the liquidity on the stock exchange in general, this should not have a negative impact. However, for the mid and small cap segment of the market, companies from Poland and from the countries, especially smaller countries where the capital markets are less developed and the only option so far has been Warsaw. So for these companies, the competitive position in terms of access to capital has worsened.
Philip, thanks. Interesting insights there. Paul, you see this region a little bit more from the outside. You're based in London. Could you talk a bit about how regional fund flows play a role here and what impact they have on the competitiveness?
Sure. I think the market has been very active in Poland in terms of issuance, equity issuance for almost the past 10 years now, which is a long period. And I'm saying this because the institutions here, the exchange and all the decision-making bodies were probably right to set up this infrastructure because, as we know, it takes time for international investors and the international financial community to establish a practice and channels and habits and I would say intellectual ability to invest in certain countries or in certain regions. And the fact that there was indeed, and there still is, a significant privatization program has created a natural influx and desire to look at the Polish economy and the Polish financial system by non-Polish participants, investors, of course, but also lawyers, banks, etc. And I'm saying this because right now where we are living in a world where things are a little bit more volatile, capital flows more quickly from one financial center to another, where there is a very heavy competition between exchanges, the fact that Warsaw has been able to early establish itself as a financial hub is a very precious thing, because it takes time for people to change habits. So I think that's the number one comment I would like to make. In terms of how international investors look at Polish equities, it's obviously driven by many different things. First of all, there is the broader appetite and perspective around emerging markets as a whole, even though I don't like this word. But within the EMEA landscape, as we call it, if we look more regionally, there is obviously generally an anti-correlation between, an inverse correlation between appetite for Russian equities and, to some extent, Turkey and Poland. And whenever we have too much volatility in the system, or political instability or geopolitical instability, obviously, naturally, capital that is deployed in the region flows into the safer regions and countries, and Poland is the #1 destination, also because these channels have been established and this habit is there to redirect investment easily into the safer havens. And if you look at what's been happening in August and September, for instance, between early August and mid-September, the VIG was up 11%, while we have seen outflows from local pension funds and mutual funds because of what Filip has described. The only reason why the VIG was up was because international investors have flowed in and have injected more capital into the system here, which obviously is a positive. The other thing, maybe to complement what Filip was saying, is that obviously the whole financial community has been talking about the pension fund reform for many months, if not quarters. As we know, the outcome was in quotes better than expected in terms of the opt-in rates. We have not seen such a massive outflow of money out of Polish stocks, and if anything, that there were inflows internationally which have compensated these outflows. So the effect of this reform is less negative than initially feared for the financial market, which is good. And if you look at recent placings that were done on Polish equities recently in the coming weeks, there was a very significant demand from Polish investors, which also is a strong and reassuring sign. So that's I think is to end this first intervention on a positive but realistic note.
Thanks, Paul. Christian has managed to join us here. Christian Keller is the global head of economics research at Barclays. But before we come to Grzegorz, sorry, Christian, I wonder if you could talk a little bit about how you see capital markets here and how they affect the competitiveness of the region.
I don't already. Okay, thank you. I can't help to make the remark that, more important for the competitiveness of an economy than the capital markets, probably the infrastructure. Now, the flight from Heathrow was 2 hours delayed. Heathrow blames the Polish airline. Polish airline blames the Heathrow. So maybe it's more of a British problem than a Polish problem. Now, I mean, allow me maybe to take a bit of an abstract look at it. I mean, last night when I prepared for the panel, I thought, okay, what does the literature say in a way? As an economist, that's often what you like to do. The interesting thing is, if you go back, there's actually quite a divided opinion, even among top economists, what really the contribution of financial markets are to growth in the longer term. And, I mean, people like Robert Lucas are quite skeptical whether it is not greatly exaggerated, but then you have people like Merton Miller, et cetera, who are very, very supportive. I think if one looks over time, there is, I think, in the literature and the research, a suggestion that it does help, and it helps through various functions. And I think if we go through these functions, probably we realize, in a way, what all the functions are. And they're similar for other markets than they are for the region. I don't think there's anything very particular for the region. I think the region is doing fairly well if compared to other emerging markets in that respect. I mean, one aspect is, in a way, you produce information. It basically makes people aware of investments, of possibility of allocating capital, etc. I think this is an important function. And I think, this is obviously something where stock markets, etc., help. I mean, the second one is, once you invested, you want to monitor your investments. And that means, capital markets typically tend to securitization. You suddenly have stocks. People need to have a balance sheet that are, approved by approved by accounting firms, etc. And I think that is, one should not underestimate, I think the corporate governance culture and the building of institutions, where I think this region, and Poland in particular, has an advantage over some other emerging markets. And I think that one should not underestimate. Another function, for example, is the pooling of savings and the raising of savings. There's always this question whether higher savings automatically lead to better growth and in a way better competitiveness. It's really more, in my view, the efficient allocation of resources, the increase in productivity. And therefore, I would really highlight, in a way, what it does for corporate governments, better institutions, because the transparency, in a way, that capital markets create. An additional aspect that was mentioned here, which a lot of the literature actually in the past doesn't do, it doesn't really look much at the aspects of international capital flows and cross-border flows, and that, of course, now has become an immensely important aspect. And obviously Poland is attracting a lot of foreign capital, and sometimes it can go both ways, because the more efficient, more liquid the markets are, the more you are actually vulnerable to sudden reversal of flows. We sometimes see the perverse dynamics that, the better your market is, money flows in, but then people view the region as just, a portfolio manager in New York just views the region as one region. So if he wants to reduce risk in a certain situation, he just looks what risk can I get rid of, and suddenly maybe some illiquid, not so well managed markets, it's difficult to get out of, so people are rather going to get out of Poland. And they have this phenomenon in London, a lot of time people talk, the zloty, the way it moves has to do with that. It's a free, large exchange rate market, where one can easily get in and out of. Very similar, by the way, in some ways to what's happening in Mexico with regard to the US. So we have these markets that actually are fundamentally quite good, but but sometimes have this perverse effect of being sold off just because they're so good, they're liquid, and one can get easy out of them. Now, but I wouldn't highlight this. I think that creates volatility. But I think, as I said, the aspect of building better institutions, and second, to attract foreign capital. A lot of the research that I mentioned earlier, was done very fundamentally in closed economies. But now, emerging markets in general, but the region in particular, which doesn't have commodities, so it's not a natural exporter of commodities, which turns the current account into surplus. There's a lot of opportunity, a lot of investment. Having a functioning capital market, a transparent, with well managed, with good liquidity, I think is a very, makes it much more easy for foreigners to go in, to look at it, to seek in opportunities. And so I would say, together with the institutional aspect, the ability to raise foreign savings in addition to your own savings, and bring foreign capital in from countries where the growth prospects are simply not as good anymore, talking Western Europe, for example. I think that for me remain probably the two important aspects with regard to the question of competitiveness.
Fascinating. Grzegorz, I appreciate, you're in a bit of a tough position here on the panel. You've got all these experts from outside telling you what they think you should know. From what you've heard in the last 20 minutes or so, are these concerns that the stock exchange is aware of? Are the things they're working on? Could you talk a bit about how you see your role in the region's competitiveness?
Yes, good afternoon, everybody. Thank you very much for inviting me to this panel. However, I must say that I'll most likely disappoint the audience big time, because we're just finalizing the work on our strategy, and we're going to publish it next week. So you can appreciate that I cannot be overly specific on some of the issues which we're going to present next week. But coming back to your question, I think most of the things I've heard from the other panelists have been taken into account in our works. Definitely we see a big role of a capital market in the economy. Definitely we've noticed, analyzing other countries, that a well-developed financial system and an integral part of it, which is capital market, is supporting the growth. Clearly, countries with strong capital market are growing faster. And as a matter of fact, you can say that with respect to Poland as well, when you compare it to some of the neighboring countries from the region that had less developed capital market, and they're ultimately growing slower. Whether that's a one-to-one relationship, probably not, but definitely we see it as a very supportive factor. Second one, we want to be, as a result of that, we want, as the exchange, we want to be an effective, efficient, and there's a few other adjectives we should add to that, capital allocation mechanism. I mean, that's clearly a role that is the role of the exchange, and we hope that there'll be more efficiency, more transparency. There were some discussions, some detailed debates about it recently, like the new Connect market that probably is not there. There are a few other market segments that we need to develop. I will definitely be touching upon this in our strategy. The third point I wanted to make is the regional aspect. We definitely are a regional hub, and we want to remain the regional hub. We have decided, as you're all probably aware, not to make any capital ties with our colleagues from Vienna, from the CSEC group. Well, we're open to cooperation, but we thought that the capital ties at this point, that's not the right timing, definitely, for that sort of cooperation, and we've decided to focus on organic growth. We see a lot of opportunities there, and again, apologies, I'll be talking more about it next week, so I invite you all to listen to that. There have been a lot of talks about attracting investors, attracting issuers, and we see definitely our role in that. We believe there is a strong role for us to talk to issuers directly because they have a choice. Even though the investment bankers bring them to the market, they have a variety of markets they can choose from. There was, again, a statement in the previous panel that the companies, the corporates from the region at the very beginning are kind of agnostic to where they are listed. Well, we want to make them choose the right market, and this is Warsaw. So we're talking to them a lot. And final point, historically the Polish market has been all about equities with some derivatives component. And clearly the bond market has been significantly underdeveloped. And we see a huge opportunity there. And it's an integral part of the capital market, and it's lagged in Poland, huge opportunities there. We're hoping that our colleagues from the banks, and I see a few bankers, they're sitting from the DCM departments. We'll be very glad to welcome you to talk about how we can bring the bond, the fixed income part of our market to the same level as the equity market is.
Interesting. We bated breath here. Christian, you mentioned this fictional New York manager, portfolio manager, who sees the region as one great big block. I mean, do the three of you agree with that sort of outlook? Is that something? Is it a problem? The more developed the capital market is here in this region, and the more liquid it is, it does run the risk of being seen as one big block that can be pulled in and out of, and people don't see the nuances. Is that something that you think is a worry?
I think it depends on the outside temperature in a way. I mean, in a world where people look for stability, liquidity seen from the US, pretty much, the whole of Europe is seen as an area of instability and therefore not good for investment. I mean, I think the debate goes well beyond Poland or the EMEA region. It's a broader European question, and we see that in funds flow or in transactions that we do. US investors' appetite for Europe and for the emerging part of Europe varies quarter by quarter, depending on how they feel about European growth, European macro. We have seen massive inflows for the past 2 years, and we have seen outflows for the past quarter.
May I correct? I mean, not correct, but I would just say what I talked about is just really a technical element. I think when people make their investment allocation decisions, they very well are making differentiate. And I think, typically they see Poland as a stronger market than some of the neighbors. All I wanted to point out that in these situations where we are, where you suddenly have these risk-off moments or moments of panic, it does happen sometimes that the most developed markets, even if it has good fundamentals, sees high volatility, right? That really was my point.
Please jump in.
Maybe just also one thing to add, I guess it's also interesting when you look on the investors' behavior, what's driving them. So if we have a period of relatively, let's say, low volatility, no major risks, then of course they are, I think, taking a more differentiated approach. But when they see some big shock, let's say, driving the markets, driving the whole region, like as Paul pointed out, that if it's, let's say, the European slowdown or the European debt crisis, then I think they are more willing to treat these countries as one. So I think there is an element of differentiation also depending on where they are coming from and what do they want to react upon.
Grzegorz, how does Warsaw see, the stock exchange see its role in that? How are you working to try to make Poland seem different from the rest of Central Europe, maybe, or stand out?
Yeah, it's all about education. What we do is we basically pack our bags and go from place to place talking to investors and presenting the business case for investing in Warsaw. I mean, clearly, not too many people are aware of the fact that we've grown 20% since 2008 in terms of our GDP growth, that we were the only country that was this famous green island, you know, that we were really, really good growth story here. And you'd be surprised, sitting in Warsaw, you would think that people know it, and it's so obvious because it's, you know, in research reports, it's in statistics, but you actually have to go there and make people aware that's the fact. You have to go around and say Poland is about macro stability, that public debt to GDP is below 50%. And that's very extraordinary currently when you compare us to the Eurozone or some other emerging markets in this part of the world. You say that, you know, Ukrainian crisis, and Mr. Papierski spoke about it from first-hand experience very recently, has rather limited impact on Poland, and the currency has been stable and the yields were on the way down. So, you know, these things are widely known fact, but sometimes you have to just make people aware that there is a good business case for Poland. You look at the dividend story, there is a very high dividend yield compared to other countries, over 4%, with interest rates on a small level. I mean, these are things, again, which have to be pushed and pushed again to the minds of investors abroad. And eventually it should come back with higher velocity on our market.
Obviously, we're going to see next week what that strategy entails. But I mean, Filip, would you mind talking a little bit about maybe what aspects of the capital market here you think are missing or could be improved, or areas where there could be benefits?
I'll try to answer that question. It's probably more a question to my London colleagues who are looking from a distance at this market. But, you know, as Grzegorz rightly said, traditionally Polish capital market has been built around equity segment. So plain vanilla equity is the name of the game in Warsaw. And I think Christian also pointed out something very important and very interesting, is that in order to be competitive, you need to become part of the global flow. You need to be part of the global financial system. And there are still a lot of instruments that are not used on the Polish capital markets because they are not known to investors, because the companies are not aware of them. And you know, in order to be truly competitive, you would need to have all these instruments in place to be a truly competitive financial regional center. And you know, there's a whole range of products. There's a whole bond segment which Grzegorz touched upon. There's a huge segment of hybrid equity-linked instruments, which is you know, booming in Europe, which has a dedicated investor base who are investing into that specific asset class, which is non-existent on the Polish market. You've got short selling, for example, and also other derivative instruments, sophisticated instruments, which are not used either by Polish fund managers because they are banned from doing it from a regulatory perspective. So all in all, I think there's a whole range of products that still Polish capital market is missing. And you know, with a sort of end of the steroids from the pension system, you know, the market participants will need to come up with new strategies and new products to keep their competitive position in the region.
Interesting. Paul, do you want to jump in there and sort of give your opinion?
Sure. Just taking a step back, looking at the way the capital markets function and the regulator also drives and the exchange drive these things, we are really in the best league in Europe in terms of how well oiled the system functions compared to other countries in the broader region. So there's been a huge work done, and the system has been working very well for quite some time. I think it has to be said because obviously things can be improved, and I'll lay out a couple of, humbly a couple of thoughts on that. But the system is working very, very well, and that includes the regulatory review of prospectuses, that includes the way the settlement functions, that includes the speed at which transactions can be done, the facility, the ease with which companies can raise capital in an accelerated way, etc. All this is working very well. I think some ideas looking at how other exchanges and other regulatory environments work, and again, food for thought here. One is probably ultimately to try and present the exchange for a venue for raising capital for international companies or companies in the region, rather than, and trying to distanciate oneself from an exchange which is strongly affiliated with the country, and the country is very good and in a very stable position, but more as a hub indeed for raising capital in the region for companies in Poland, but also outside Poland. And this is obviously what London is doing. This is what Euronext is trying to do. They present themselves as a sort of pan-European platform without any particular country affiliation. And that may be one idea from a communication perspective, and I know this is obviously stuff that the exchange is considering now. Being more technical in terms of avenues for considerations, one is especially for foreign companies who and there are a lot who are considering indeed listing in Warsaw, if there was a way to encourage or facilitate listings without retail offering, with minimum disclosure in Polish, minimum or no disclosure in Polish. This I think would significantly enhance the attractiveness of the exchange, and certainly this is what other regulators are doing in Europe, i.e. have prospectuses which are drafted only in English, and there is no retail offering, or retail offering is an option for those who want to go for that. And obviously not every company is suitable for retail offering in the first place. So that's about disclosure and regulatory review. Obviously, instruments, Filip mentioned in equity link, that there hasn't been any equity linked offering to date in size for many years. There was one more than 10 years ago. That obviously would be a first, and I think it certainly is one missing block in the portfolio of instruments that would enhance the appeal of Warsaw for investors, equity investors, but also equity investors who represent a proper asset class and a proper pool of money that is waiting to invest, and actually that needs investment opportunities. Some other ideas around the ease and the facility to report financial information, whether financial information can be reported in Polish only, in English as well, and the system which is used maybe could be also improved. Settlement obviously takes quite some time. The international financial community is absolutely fine with that, but facilitating or easing and speeding up the settlement cycle could be an idea as well. And finally, takeover law, ability to delist, take out of the exchange companies, could also potentially be made a bit easier. So again, some food for thoughts and avenues for considerations without being prescriptive, of course.
Interesting. Christian, I mean, as Grzegorz mentioned, the potential merger with Vienna was dropped. I mean, how do you see that in view of the whole region's competitiveness? It's obviously good news for Warsaw, but does it, from an outsider's point of view, increase the competitiveness of Poland, or do you think it's a missed opportunity?
I probably refrain from making a direct yes or no statement, because I'm not an equity market expert. I would say one thing, again, maybe with a perspective from global investors. Size matters, in the sense that if you often hear as a researcher, as an analyst, you have great trading ideas, and you look at all these markets, you say, this looks perfect, and they look at it and they say, what's the size of the market? What can I do? What kind of sizes can I trade? And admittedly, I'm coming more from the fixed income world. And then you realize, you ask your trader, and you realize, well, it's all quite limited and it's small, and so it also brings complications to growing, right? So that's why there are probably experts who know what maybe in regulatory terms and all kind of other issues that emerge when you do see these type of mergers. But I would say, as the global system integrates further, despite even the crisis, a lot of the big funds, they just can only invest if they can do it in certain size. Secondly, I would pick up on the one point made earlier about the corporate bond market. I think that's an interesting point. I know this is more about equity. As I said, I come from the fixed side. Poland has a very well-functioning government bond market, and it is highly attractive for foreign investors. Poland has a share of, I think, over 40% of local Polish government bonds are held by foreigners. It is one, and we do this every month. We go through all the highly, probably 10, 11 liquid emerging market bond markets. That is the highest. And I think, the Hungary is similar, but then everything else, I think the average is 25% or so. Long story short, that's already a market where Poland is very successful, attracts a lot of foreign funds. And, one should imagine that, a corporate bond fund market should go in a similar direction. It has been a very big trend with investors. If you look what kind of funds have grown, emerging market funds in recent years was all the big trend in a way, that the big fashion was really to start emerging market bond funds, admittedly most of them in hard currency, but there are some who increasingly also are willing to buy a domestic, local currency bond funds, corporate bond funds. And, I think that is an interesting opportunity. I think so far it's mainly, really, it's South Africa who has a large, rand-denominated corporate bond market. Turkey just started with a few, but one would imagine, given the development of Poland, that a corporate market could be quite interesting. So that's my comment on that.
I wonder, are there any questions here in the audience for the panel? We've got about just a little less than 10 minutes left to go. My goodness, come on, you've got these 4 experts here. 5 experts, sorry, plus me. No questions, my goodness. There's been some talk, and we were discussing earlier about whether or not Poland could become a capital exporter. I mean, is this a bit far-fetched? Should we be sticking to making the local market more competitive first, or is this something that really could come to fruition? I mean, what do you think?
I think purely from a macroeconomic point of view, the region eventually is becoming a capital exporter, at least in the sense that if you think about capital exporters as the countries where you have current account, let's say, surpluses, then the region together, so if you take the current account positions and the EU fund flows that are coming into the region, then basically you find that these countries can become, technically speaking, capital exporters. Of course, in Poland, the situation is even more specific because of the still very decent size of the local pension fund industry. And as Filip has mentioned, the bar to foreign investment has been raised and is going to be raised. So in this sense, Poland is also very special here. But I think, once again, if you're talking about size, then when I look on the CE3, these countries are still kind of capital exporters. So if you look on, let's say, the total capital they have attracted versus how much they have invested abroad, then the ratios are still quite telling, because I think, Poland probably has around 50% of GDP, more capital imported than what they have exported. The Czech Republic, let's say, this is the lowest ratio in the region, somewhere around 30%. So I think, the flow is changing. The stock, of course, is clearly likely to remain as a capital importer.
Filip, do you agree with that assessment?
Yes, Gyorgy, as you said, I'm technically with a current account surplus, or on the way to the current account surplus. Poland will probably start to become a capital exporter. Now, talking about savings, Polish savings, here, there are some different factors affecting potential outflow of capital, but one of the factors is the pension fund reform, And the other one is search for yield, with very low yields generally, and diversification of assets, international assets will become a fact in Poland. And so it's not only driven by regulatory changes within the pension fund system, it's also driven by the sort of a private sector savings looking for alternatives and looking for higher yields. And there's a number of investment companies which are already creating products and offering products which allow Polish savings to flow into international assets.
Christian, do you have a view on this? I mean, is this something that comes up on your radar or not at all?
It's an interesting question. I mean, we already have countries like Hungary, which, as part of the crisis and the deleveraging, in a way, have turned into surplus countries. Again, maybe I put my economist's head on. It in principle, it doesn't make sense, right? I mean, you would think if you make an analysis based on demographics, productivity potential, etc. I think you would come up with if you calculate a normative current account balance, you would think that Poland should run a deficit because there's investment opportunities compared to other parts in the world. So water should not flow up the river, up the mountain, right? Water should flow down the mountain. So it could go Western Europe still to the east. And, I would think that still makes sense. Whether temporarily, if you have these changes in legislation where suddenly you have capital outflows because of, changes in pension legislation, etc. But, apart from a crisis situation, I think it should remain a capital importer. That's what I would think in terms of an intertemporal budget allocation among, investor nations.
I wonder, just as a final question for the panel, I mean, we're all sat here in Warsaw in this fantastic stock exchange building. Is it good for the whole of Central Europe's competitiveness that Poland is so strong, or is there an argument that Poland could well be crowding out other parts of Central Eastern Europe that could be more competitive without sort of a very strong Warsaw? I mean, just as a final sign-off. Grzegorz, you can go last. First, actually, if you'd like. It's very brave of you.
Very much for that. I might be a bit biased with my opinion. I think we've already heard the explanation, the answer to this question during this panel. I think liquidity attracts more liquidity and it attracts investors. So the fact that we're building a liquid market in this part of the world can serve not only the economy in Poland, but also in the regional, in the other countries in the region. I mean, growing in liquidity, because I specifically mentioned liquidity, not necessarily size, will attract investors and then potentially issuers as well from other countries. So I think it's positive for the region, but again, I might be slightly biased.
Thanks, Paul.
I agree. Of course, I think there is this pattern and habit and channels which have been created, and Poland it's a fact. It's beyond flattery. Poland has been and is still seen as a model in terms of building a capital markets platform that works. Therefore, it's a known investment destination. It is the key focus of investors within the CE3 region, and Poland has listed a number of companies in the utilities, in the financial sector, which also happen to be very well represented in the neighboring countries. So therefore the comparisons are very easy to make, and there are representatives from other governments and other countries here attending the conference, and certainly some countries are trying to replicate what has been accomplished in terms of privatizations, in terms of attracting capital, sensibly executing transactions, and making sure there is a right balance between the local ownership and international ownership, which always is a difficulty. So that's the short answer is yes, that's a plus, and Poland is still very much seen as a model in that respect by the immediately surrounding countries.
Filip, I'm sure you agree.
It's becoming more and more difficult to add value. So my predecessors pretty much stole the show, but yeah, well, it is what it is. Poland is the largest country in the region, and it's a snowball effect. The critical mass attracts more mass, and it's very hard to to replace the largest player in the region. With one caveat, and I think that touches on what Paul said. The only country in the region that could potentially replicate Polish model is Romania, right? And this is the path. If they are doing things right in the next couple of years to come, I think you could see the creation of maybe not the similar size, but of a similar regional player. But there's nothing wrong with the largest country in the region having the largest capital market.
Gyorgy, do you think Romania does pose a threat to Poland's domination?
No, I don't think so, but I think I definitely agree with Filip that it has certain features that would enable Romania to develop its stock market more, because Romania is also undergoing an EU-IMF program for the last 6 years. Part of it is right now, for example, privatization in the energy and in the transport sector. So you got more listings, just like similar to some of the privatization processes that you had here in Poland. So yes, Romania is, I think, likely to grow in size, but in terms of, is it going to be a danger to Warsaw's dominance? No, not at all.
I think maybe one point to add is about the way ahead and how to attract companies to raise capital, whether it's bond or equities in Warsaw. And for many years, obviously, Warsaw was a welcome destination for issuers from the immediately surrounding countries, so the Baltics and Ukraine. Now, certain things are happening in those countries, and obviously there is less capital markets activity. To be frank, there hasn't been much of a relay from other companies, from other companies in the other countries in the region, in terms of raising capital or even being listed in Warsaw. And there has to be a divide, obviously, between state-owned companies. And we've seen that in Romania, where in every country the government will want to favor its own exchange. And this is valid for Romania, but this is also valid for any country in the world. So it's all about private companies, effectively, and private companies who are indeed agnostic, and convincing them that the listing process and life as a listed company is as good, if not better, than if they were to list in their home country or in London or Euronext. I think that's the key objective.
Christian, the final word is Warsaw's position secure?
Well, I think it is, and I mean, I think one shouldn't. I don't think it was a good question, but I think it's a wrong question to think of one country, one stock exchange doing good at the detriment of others. I think this is this is not a zero-sum game. I think this is about size, about transaction costs, and it is true that, of course, if one builds, and we have that in history, in economic history, that often by coincidence, by historical coincidence, sometimes a certain institution becomes very strong in a country, and then things develop around it. And I think Poland has always an advantage. I think countries like are good. I think Europe is going through a difficult phase at the moment, but I am quite optimistic. And as was said earlier, Poland in a way is a country that looks from many aspects quite solid.
Very good. Lots of food for thought as well, I'm sure, for the strategy next week. Thank you to the panel. Thank you to Christian, Gyorgy, Filip, Paul, and Grzegorz. Thank you very much. Round of applause to the panel.
Thank you very much, gentlemen. Thank you for your discussion, for your views, encouraging opinions. Thank you, gentlemen.